Welcome back, Market Snipers. This is Jesse. We have one question we need answered today. Is the Dow Jones meltdown confirmed? That's what we're going to take a look at. We've seen some market sell-offs on the Dow Jones, but also the S&P 500, the Russell 2000 really sold off. The NASDAQ seems like it's selling off. And what we're going to do is we're going to look at three major reasons why the Dow Jones meltdown could be confirmed. And if you stick around to the end, we're going to look at two strategies, how you could take advantage. One high risk and one a lot lower risk. So let's dive right in. Here is the weekly chart of the Dow Jones that we're looking at here. And if you look at this long upward trend line here, it had a weekly close back in September, right? And even before that candle closed back in September, if you go all the way back to the very top, July 2023 on this weekly chart, we had a reversal candle, right? And I have the indicator turned off right now, except for the reversal candle, just because I want to show you a couple things, right? Besides the reversal candle, we have this huge red candle here is a bearish engulfing candle of this green candle here. So that's very bearish, right? So you got the reversal candle, a huge bearish engulfing candle here, followed by found temporary support, bounced up for a couple weeks, put in a lower high. And by the way, we've been covering this every single day on the live streams. So if you aren't watching us on the live streams or check out the recordings, definitely join us on the live streams every single day, Monday through Friday. We are covering these markets and we're snipering them together. So reversal candle, bearish engulfing candle, looks like a lower high was put in, right? Another big candle close below this upward trend line, right? This is the weekly chart. So it takes time to play out. It takes weeks. It takes months to play out. And it's breaking down. On this candle here, if I were to turn the indicator on, you're going to see it on this other chart that I have. It'll say that we had a sell signal on the weekly chart, right? And then it's been red straight down, except for the one little green candle here. Another bearish engulfing candle, right? It wicked all the way back up here. Well, I talk about all the time. What you're going to hear me talk about all the time is it's not how the candle starts, it's how it closes, right? So the started up here, very bullish. You know, everyone's getting excited again. All the bulls are like, yeah, everything's fine, right? Creates this wick, starts moving down, and then the last couple of days, it just flushed down to the downside, right? So that's the weekly chart. Before we get to that next chart, I want to show you with the indicator on. I want to look at the monthly chart, right? So if you kind of zoom out here on the monthly chart, we got some targets. We're going to show you on this other one. Got the March 2020 low. As you can see, we've got this all-time high here, December 2021, right? And then this big correction down, followed by a rally, right? So a big move down, followed by a rally. And this is looking like a macro lower high, right? And 3 monthly red candles in a row. It seems like we're going to continue downward to the downside, right? Downward to the downside, right? There we go. All right. So let's move over to this chart that I have already mapped out. So that's one reason, right? One reason is the weekly chart. The second reason is the monthly chart, right? Oh, and what I want to show you on the monthly chart is this. We're going to go in and type in the monthly chart, and we're going to show this right here, the MACD, right? Here is the second reason. The second reason is this. We have this bearish MACD crossover, and it doesn't happen often. You can see this bullish MACD crossover lasted for a long time on the monthly chart, followed by a bearish MACD crossover, and it lasted for a very long time. But then as you zoom in here, you'll see that we had a bullish MACD crossover, and not even 1 month later, and then the second month later, we had another bearish MACD crossover, right? So it seems less likely that we're going to have another bullish MACD crossover. So in my opinion, in my humble opinion, right, in my own point of view, this is looking like this is a bullish crossover, fake out to the upside, but it was also that nice rally. we had a nice rally to the upside. So I wouldn't even call it a fake out. It just looks like a fake out on the MACD. And now it's crossed back over, closed back there in September, and it's continuing to trend down. So that's number two. Number one, the weekly chart. We had a reversal single. We had a lower high, which confirms it. And then we had, the sell signal on our actual own indicator, right? And then we have a bearish MACD crossover. So that's reason two. Reason three, the other indices have also had similar looking, and the Russell 2000, right? So if we look at the Russell 2000 real quick, we had a sell signal back below the 200-week moving average, right? Many investors consider that very bearish, right? This is a monthly chart. Sorry. Let's get back to the weekly chart. The weekly chart, right, had this sell signal back below. So even before the Dow Jones, right, the Dow Jones had that reversal candle followed by a sell signal. Then it battled the 200-week moving average for a few weeks on the Russell 2000, right? Then a sell signal back below the 200-week moving average. And then it's just been straight down ever since. Now you're looking at the weekly chart, took out this pivot low here. So this pivot low here at 1740, the Russell 2000 is already back below it, right? The MACD had that bearish crossover, and it's back below the zero line, which is bearish, right? Everything's trending down. Everything's trending down in the Russell 2000. Not just the Russell 2000, not just the Dow Jones, not just the S&P 500, right? So if the Russell 2000 is back below the 200-week moving average, can the S&P 500, which also had a sell signal, it was a pending sell signal, but then the weekly candle close already closed today. So that it will already say starting on Sunday, when the futures markets open back up on Sunday, this will flip from a pending sell to a sell signal, right? So could the Dow Jones, could the S&P 500 be lagging time-wise and follow the Russell 2000 down to the 200-week moving average? It appears so, right? So this is the third reason. The Russell 2000 already is back below it, right? S&P 500 trending that way. Dow Jones trending that way. Could the NASDAQ be next? I think so. It's very close to getting a pending sell signal. I was watching it all the way to the last 5 minutes of the candle close to see if it would actually trigger a pending sell, which would then trigger a sell signal. So going back there, it's not just the Russell 2000. It's not just the indices, right? It's also large name stocks like Amazon, right? That is part of the Magnificent Seven. So you can see Amazon went well below the 200-week moving average. And when the rally happened, it rallied just to get back above the 200-week moving average and then closed back below it in September. Then a couple of weeks down, letting the trending dots catch up, letting the moving averages catch up, right? Now we had a sell signal this week, right? So a sell signal on Amazon, and it's going down, right? So many major stocks, not just regular stocks, many major stocks, and this is the third major reason, right? Many major stocks are already back below the 200-week moving average, have already retested below the 200-week moving average. We could rattle off Amazon. We could rattle off Meta before the rally, Netflix before the rally. Okay, you're not convinced yet, right? Okay, what about Disney, right? Disney, 3M. There are so many stocks that have already gone back below the 200-week moving average. It seems like it's just a matter of time. Whew. All right, so let's go back to the Dow Jones, right? Those are the three reasons why. I want to look at the targets, right? So we're also going to look at lower possible targets, and then with all these potential problems, right? All these targets, what could you do to possibly take advantage of this market? A, or B, protect what you have and your assets that you have, right? So again, staying to the end of that, you're going to find out those couple strategies, and we'll talk about them at the end, right? So let's dive in. The weekly chart, going back, reversal candle, sell signal on the indicator. The trending dots are trending down. It seems like a matter of time before this 200-week moving average gets retested, similar to the Russell 2000, similar to Amazon, and similar to many of the other stocks, right? So if we kind of zoom out here, we're going to zoom out. If you look here, you've got the all-time high. You've got a line here of the March 2020 lows. The reason why I have that, the reason why we have these targets mapped out, the number one reason is we have these targets mapped out because they're long-term sniper targets with confluence of reasons why it could come back down. You can see that this target was already hit once, right? It was already hit once, reverse, came back down, put in bullish divergence. We talked about this, had the rally. Not as good of a rally as the NASDAQ, but it had a rally. The Russell 2000 didn't have as good of a rally, right? So came back down, trapped some bears down here, rallied. Now it's looking like the lower highs put in. Step one, target one would be to come back and retest the 200-week moving average. Start closing daily behind the 200-week moving average, below the 200-week moving average, just under $32,000 on the Dow Jones futures. Signals to me that we're going to come back and possibly retest this very first longer-term target one. Right? Okay, then you start closing weekly below, right? Just like the Russell 2000. Then you start closing weekly below it. And then you see it drop down faster and faster from there, right? So that's the SP 500. Let's get back to the Dow Jones. So step one, does it retest 200-week moving average? I think it does, right? Obviously, none of this is financial advice. Obviously, I'm not your financial advisor. Obviously, I'm not your financial planner. Obviously, do your own research. Obviously, this is for educational purposes. And obviously, this is hopefully a little bit of entertainment, right? So definitely talk to your financial planner. We're going to get into that in the two strategy. I'm going fast because we got a lot to talk about, right? And we're already at 12 minutes. So we want to try to get this wrapped up in 15 to 20 minutes tops. And we've got a lot to cover, a lot of good stuff, I think, in my opinion. So this is the top. This is the lower top, right? It's still fairly early if you look at the grand scheme of things of how far this potentially could drop and possibly even back below this final target, possibly back below the March 2020 lows. But before we get to the March 2020 lows, we have to worry about this target. Before we get to this target, we have to worry about this target. Before we worry about this target, we have to worry about retesting this first target here on the macro level, right? Before price retest here, before we worry about it, we have to retest the 200-week moving average. So this is what we're continuing to watch. Here's a breakdown of the trend line. Sell signal continuing to trend down. The 200-week moving average, the probabilities continue to increase, continue to stack over and over again, and we're going to watch it play out. Here are the next targets. We'll take it level by level and watch it all the way down and take advantage of it. Now, how are we going to take advantage of this, right? The first and most simple one out there, right? The first one is go to cash, right? Your most simple strategy is, well, Jesse, that sucks, right? You're not going to make any money. Plus, the dollar value is losing value every single day. I know. Calm down. Wait, hear me out, right? For example, say you don't have a big investment account and you're not managing your funds whatsoever. What you could do, what I did when I texted my immediate family on October 12th, and I took a short position to short the NASDAQ, right? And that's going to lead me to my my higher risk possible scenario, possible strategy to take advantage of the market, right? You go to cash, right? Cash is a strategy, right? And why would you want to do that, right? Why would you want to potentially go to cash? For example, if you're an investor and you don't manage your money whatsoever, the first thing you do is you contact your financial advisor. You contact your financial planner, whoever it is, whoever is managing your 401k, whoever is possibly managing your pension, whoever is possibly managing your IRAs, whatever it is, whatever kind of investment accounts you have, you are able to go to cash, right? You should be able to. Maybe there's some that don't allow you to or fight you on it, right? Maybe there's some rules on your particular one, but from my experience, you should be able to go to cash. So you talk to them first, see if they have a plan in place, see if they have a strategy to go to cash, right? And I'm not just saying that they go to cash and you don't make any money, right? there's multiple ways that they could have a strategy of cash. One is that they put it in some sort of they do nothing. They just literally have it in cash. That'd be one. Two, maybe there's some sort of money market account that they could put your 401k into and get 3 to 4%. It's better than nothing. It's better than losing potential value of your account, even from here, right? Even from here, what if his target one, saving 11%? Your purchasing power to get back in would be tremendous. What if you save 23%? What if you save 35%? What if you save 45 to 50% of your portfolio and then you can come back? You would be able to, if you saved 50% of your 401k portfolio and then towards the end, right? You tell them, hey, what strategy do you have to buy the right dip, to buy the dip at a key support area, right? At a key support area. Maybe prices are all the way back down here. And you're like, what strategy do you have now? Okay, great. What if they make 8% per year, right? Now you're buying back twice as much, right? So if you had $50,000 in your 401k and it drops 50%, you now have $25,000 value and you can't do anything, right? It could take years. The NASDAQ.com bubble took 10 to 15 years from the top to regain its value. Do you have time to wait? I don't. I don't have time to wait, right? I'm in my 40s, right? So that's what I'm telling you. I remember my parents. I remember them in 2008 losing half their value of the 401k, and they took a long time to regain that, right? So if you had $50,000 value, right? Quick sip of water. Here we go. If you had $50,000 value and then you waited for, some sort of reversal down here, March 2020 lows, and you picked up twice as much stock as you had if you just let it drop, right? Then if you have twice as much stock or ETFs or whatever they're invested into, whatever your financial planner says, then when it makes 8%, you're making 8% based off of the $50,000, not 8% off of the $25,000 as an example, right? So that's strategy one. That's probably the most conservative. Also on cash, they could put it into a 10-month CD, right? 10-month CD. And yes, your money is locked up for 10 months, but you could gain like 5 to 6% on that CD for the next 10 months. Talk about trying to help keep up with the future dollar value and or inflation, right? 5 to 6%, not too bad when we're looking at a possible bigger market correction. Obviously, never a guarantee that there's going to be a bigger market correction. This is just my own opinion, my own thoughts on it. Now, for the higher risk stuff, right? Here is the higher risk stuff. I'm going to flip over to the NASDAQ just to show you what I did. And there are bear ETFs for the Dow Jones, right? But what I did was, looking at the NASDAQ for my high risk is I went in here at $15,314. Where is it? 15,314.25, right? And I took we'll have to drop down the daily chart. At this 15,314 on October 12th, I took a short position with leverage on NASDAQ futures, right? That's high risk stuff. So if you're already if you're already in it, great. That's awesome. Maybe you wait for a bounce, right? If you're highly skilled or you have some experience in shorting the market, maybe you wait for a bounce and then short the next bounce, right? That's what we did. Shorted, let it bounce, shorted, took profit, let it bounce. And then I got in again. And now my position's back up again. That is one high risk. Another one, you could do options. I didn't do options this time, right? But another one, you could find an ETF that works for the Dow Jones. And for example, the SQQQ, right? So the SQQQ, which I also did stocks only. I didn't do the actual, I didn't actually do options on this SQQQ, but you could look up Pro Shares Ultra Pro Short. All you would have to do is buy stock. For example, I bought back here on the buy signal and it's breaking out, right? So it's breaking out on the daily chart. Maybe there's the Dow Jones Bear ETF where you just buy the stock and it's doing the opposite. But also, this is very high risk because this is a 3x built-in leverage. So make sure to know what you're doing if you're going to be doing something like this. And the weekly chart isn't even bullish yet, right? There's not even a buy signal on the weekly chart yet. So it's still relatively early, right? You can actually buy the stock of a bear ETF. And those are the two strategies. One, go to cash, right? But don't go to cash blindly. Talk to your financial planner, talk to your financial advisor, see what they say, come up with a game plan. When I sent the text message to my brother and my family, he copied and pasted my text message, sent it to his advisor, and the advisor said, quote unquote, me and the partners just had a meeting, and we also believe that value is coming to the markets, right? And then my brother took one of the videos, right? Crazy. It's so weird. He took one of the videos. It was either the market crash back here talking about the NASDAQ, or it was the crash confirmed about the SP 500. I didn't follow up with him on which one it was. Probably since it was October 12th, he probably sent him the stock market crash video. He literally sent his advisor. He copied and shared this with his advisor team and sent that to him. I don't know if they watched it. Who knows if they watched it? But definitely go check out those videos. He actually sent it to his advisor. I think it's hilarious. Sent it to his financial advisors who's managing, hundreds of millions of dollars, probably, if not more, right? Who knows how much he's managing? But he sent my videos to him, so I think it's hilarious. But with that said, thank you for your continued support. I appreciate everything, all your likes, all your subscribes, all your shares, right? All of that. We will continue to sniper the markets together. I hope you have a good weekend, and we'll see you on the next one.